Hey there, Tobie Love here with Cross Country Mortgage, coming to you with your weekly wrap up. Crazy stuff is going on right now. So I know that you've been watching the news and you see all of this craziness going on, mainly with the Bank of Silicon Valley right now. So what does all that mean? So I'm going to take a minute and just break it down to you and how it affects us here in real estate and mortgage. So last week, the Bank of Silicon Valley got shut down by the FDIC because they didn't have enough liquidity. Now that happened last Friday. So you're probably watching this on Friday, March the 17th. Happy St. Patty's Day. What happened last Friday was that the Bank of Silicon Valley got shut down by the FDIC for not having enough liquidity. That caused a lot of panic and fear, so much that the FDIC actually had an emergency meeting on Sunday, and by this past Monday, they guaranteed that they were going to cover all the deposits. Now, why is that huge? Typically, the FDIC is only going to guarantee up to $250,000 of the deposits. If you had $300,000 in the bank, then you would have lost $50,000. So why did they do this, and why was it important? The FDIC decided to do this because if they hadn't, then they'd had a mass amount of people going in and pulling their monies from the banks, and something would have happened called a run on the banks because people would be afraid to keep their money there. We can't let that happen. So the FDIC jumped in and guaranteed all those deposits, which was awesome. But what's happening here is we're seeing something in the mortgage industry, and it's called flight to safety. And it's where people take their money from banks and stocks and actually move it into bonds. So this week we've seen some lower interest rates due to that, among some other things that are going on out there, but a lot of it was to that. It makes for a really roller coaster of a ride for our home buyers out there that are home shopping, for my partners, my real estate agents that are watching this video, for myself, because literally I can quote a rate one day and the next day it can be totally different. We have to be very, very impactful when we're setting the expectation. And I do that right at our consultation and multiple times during conversations. Almost every conversation I have, I'm reminding them of the volatility. But we need to keep an eye on this. Hopefully interest rates will continue to come down and we'll continue to see this trend. I'm going to be making another video shortly here about May 10th, which is a date you definitely should be circling on your calendar. That's when we're going to have April inflation numbers. So in May, June, and July, we're going to see a lot lower rates. And that's going to be great for our clients that have purchased in the past, say, year. They're going to be able to refinance. But for our home buyers out there, it's going to create a lot of competition. So right now is a great window of opportunity where they can get in still. Yes, the interest rate will be higher, but they'll have less competition than they will in the summertime. So we need to keep repeating that. If you have any questions about any of this craziness going on, I'm trying to keep this video as short as possible. Please call me. I'm happy to have a conversation, but hopefully this gives you enough info to load your lips for our clients out there. Talk to you soon. Have a great weekend. We're here if you need us. Bye.